So welcome guys. So in this session we will be learning about adjustment entries. So in the previous session we have discussed how to write the journal entries which are affected commonly. So what is meant by contra entry, what is credit purchase, credit sale, how the expenses will be recorded, how the incomes will be recorded. If you guys have not watched our previous session, so at the description there is a link, you can click on that and you can watch the video. Now let's continue with this adjustment entries. Let's see. Our first adjustment entry, outstanding expenses. So what are outstanding expenses? If you guys observe here, we have given something like outstanding expenses are cost incurred but not yet paid by the end of the accounting period. They are recorded as a liability on the balance sheet until they are settled. See, outstanding expenses are nothing but the amount which we need to pay it. So we can say something like pending amount. Okay. So at the down, if you guys observe, I had given some kind of transaction like outstanding salaries. So the salary where we need to pay it. For example, let's assume that every month we are paying a salary of 1 lakh rupees. January month I have paid 1 lakh, February I have paid 1 lakh. Now coming to the March month, I have paid only 95,000 and 5,000 I have holded for so and so reasons. So what will happen? This 5,000 will be carried forward to the next month and added to the next month payable salary. So how much is going to be the next month salary? So our general salary is 1 lakh and the outstanding balance of 5,000. So the overall salary is going to be 1 lakh 5,000 rupees. So until you pay this 5,000, it will be carried forwarded up to the year end. So for this, the journal entry what we have done, salaries account debit to outstanding salaries. This is what the journal entry we have written. So salary is an indirect expense and outstanding salary it's a current liability where we need to settle within the year, nothing but within the 12 months. So that's why here specifically we have mentioned that incurred but not yet paid by the end of the accounting period. So by end of the accounting period you need to pay this particular outstanding balance. That is the thing we need to do. Okay, is it clear? I think so. Yeah. Now let's move to the next. Prepaid expense. Prepaid. So observe here what we had given. Prepaid expenses are payments made for goods or service before they are actually received or used. They are recorded as assets on the balance sheet and expended over the period they benefit. See guys, prepaid is nothing but paying a kind of advance. So generally if you guys are taken any particular place to the rent, so office rent or go down rent, whatever it is, so there we will be paying certain advance amount. So let's assume our per month rent is 10,000 rupees. So when you guys are taking that particular place as a rental, we will be paying certain advance amount like 2 months rent or 3 months rent in advance. So this particular amount is called as a prepaid. Prepaid. So for this the journal entry, prepaid rent. So prepaid rent account debit to rent paid account. So this is the journal entry. Okay, is that clear? Yeah. So outstanding salary it's a liability and prepaid it's a current assets because we no need to pay for the particular month because already it has been paid. Okay, coming to the next, depreciation. So what is depreciation? Depreciation is the allocation of the cost of a tangible fixed asset over its useful life. It reflects the gradual reduction in the value due to wear and tear, usage or obsolescence and is recorded as an expense on the income statement. Because depreciation is nothing but reducing the value of an asset due to its time value. See, let's assume that we have purchased a particular mobile phone in the showroom today, cost of 20,000 rupees. So we have purchased it. So after 30 days, I have gone back to that particular showroom and I have made a resale of that particular mobile phone where I have purchased it for the 20,000. So now think about it. Will that particular person will purchase the product at the same cost? Otherwise, he will be reduce the value and he will take. So of course, the product value will be reduced. So the simple thing at the time of purchase. So in the immediate moment, the value will be reduced. Even if you use it properly or not, it's a secondary. So immediately when you purchase any particular item, from the on the time onwards, the depreciation will be appears. That's it. So for that, depreciation on machinery, this is one transaction. We have written an entry like as depreciation account debit to machinery account. Depreciation is an indirect expense. Machinery is a fixed asset. So actually we are not paying any amount, just we are reducing. Okay, is it clear? Yeah. Next, discount allowed. So what is this discount allowed? So discount allowed is an expense and is recorded when you provide a discount to a customer. So we are having a business and we are making a sales of the particular product or the service. So actual agreed cost will be different, and after that we had given some kind of discount. So observe here, cash received from the Ramesh 10,000 and discount of 2,000. See, the total amount over here is 12,000. In that 2,000 we have provided the discount. So we have provided a discount. So for that what we have given? Cash account debit, discount allowed account debit to sale. See, actual amount we have received only 10,000 rupees, but our sale amount is 12,000. In that we have provided 2,000 of the discount. We will consider this is also an expense. So this is how you need to write a journal entry. So cash account debit, discount allowed account debit to, there is a small mistake over here. Let me rectify. So cash account debit, discount allowed account debit to Ramesh account. Yeah, Ramesh account. Yeah, now it is clear. So cash account debit, discount allowed account debit to Ramesh account, because we are receiving the amount from the Ramesh. Why? Because previously we have done a certain sale to the particular person. That's it. Now let's move to the next. In the same, if you guys observe, bad debts and provision for bad debts. So what is this bad debts and provision for bad debts? The amount may or may not be recoverable is called as bad debts. So generally, if you make any particular sale of an item, let's assume value of 15,070 rupees. 15,070 rupees, that's the cost of the product we have sold. So the customer paid 15,000 rupees and he have forgotten to pay the 70 rupees and he said he will be paying afterwards. So we will be thinking he will be paying, but until the time he has not paid. So this amount may or may not be recovered. So that is the thing. So that's why you will be calling it as a bad debts. Observe here. So bad debts are considered an expense and occur when a specific amount is deemed uncollectible. Deemed uncollectible. That is the thing. Okay? Yeah, what is the journal entry for this? So bad debts account debit to cash account. This is the journal entry. Same provision for bad debts. So provision for bad debts, what it is? See, difference between provision for bad debts and bad debts. So here in the provision for bad debts will be pre-assumed. So this much amount will not be recovered. So chances of not recovery. So observe here. Provision for bad debts is an estimate of potential bad debts and is recorded as an expense. This is a contra asset account that reduces the accounts receivable balance. So provision is nothing but it's an estimate. So we will be predetermining this much amount may not be recoverable, may not be. So this is the journal entry. Bad debts account debit to provision for bad debts. So this is the thing. Okay, clear? So adjustment entries will be different while compared to the basic journal entries. So you guys need to little stress on this while you guys are learning these kind of adjustment entries. Outstanding, prepaid, depreciation, discount allowed, and coming to the discount received point, the entry is going to be reverse one. So we will be considering that amount as an income. This discount received, this answer you guys need to find out and you guys need to comment me. Okay? Is that clear? Okay? Is that clear? Okay, guys?